It anticipates it will add $19 trillion in debt over just the next 10 years. If we take a look at their report, we can see that they project by the year 2050 for the total debt to GDP to exceed 200%. Many economists view 120% as the point of no return. If you pass that point, you're basically a snake eating itself by the tail, and there is no amount of money you can extract from the economy in order to save the debt issue, solve the debt issue, while at the same time allowing the economy to continue to thrive and grow that allows you to continue to try and pay off that debt. Once you reach 120, basically you're destined to default.
Prices keep rising in America, and policymakers are asking how the central bank could let this happen.
Forward guidance, I think, overall slowed the response of the Fed to the inflation problem last year.
Investors think more price increases are coming. By the Fed's count of inflation expectations, prices will have risen an additional 6.8% by the summer of 2023.
Generally speaking, an increase in the level of U.S. debt can potentially lead to inflation if the government decides to finance the debt by printing more money, or if investors lose faith in the government's ability to repay the debt, causing them to demand higher interest rates. When the government prints more money to finance debt, it increases the supply of money in circulation, which can lead to inflation. Additionally, if investors are concerned about the government's ability to repay its debt, they may demand higher interest rates on government bonds to compensate for the increased risk. This, in turn, can lead to higher borrowing costs for the government and ultimately contribute to inflation. However, it's important to note that the relationship between U.S. debt and inflation is not always straightforward. Other factors, such as economic growth, changes in global markets, and the actions of the Federal Reserve, can also play a significant role in determining inflation rates. For example, during times of economic growth, inflation can increase even when the U.S. debt level remains relatively stable.